Good day, ladies and gentlemen. In this video, I'm going to be showing you why your order blocks fail most of the time. Okay, so many of you might have noticed that when you draw out your order block and you wait for price to return to this order block, more often than not, it ends up hitting your stop loss. The thing is, sometimes you are drawing these order blocks the wrong way. Okay, so something you just need to understand is another block is simply a block from which a lot of orders were placed. It could be buy orders, it could be sell orders. Okay, so you need to see that aggressive push of price to the upside or to the downside before you can start trying to spot out your order block. All right. So many of you that actually trade on the 1 hour time frame, for example, or higher time frames, you guys are going to experience more failed order blocks because of what I'm going to be teaching you in this video. So you need to pay attention in order to avoid drawing out order blocks only to end up losing. Okay, so the thing is, if you are on a 1 hour time frame or an higher time frame, for example, if you place your order block right here, look, we have an order block right here, which is that bullish candle before the bearish aggressive drop, right? So you want to mark out the boundary of that bullish candle just before the bearish drop. Do you see that? If you take this order block like this, it will most likely hit your stop loss. Okay, one of the major reasons why it will happen is because this order block is too big, so there is room for manipulation within the order block before it moves in your direction. Okay, so when you're on an higher time frame like this, the question you should be asking yourself is, where did the aggressive selling start? That in itself can help you avoid unnecessary losses. Okay, so where the aggressive selling actually started is the bottom of this bearish candle. So that should be your first line of entry. That should be where you should be looking to enter, not somewhere here. No, your first line of entry should be towards the bottom side of that bearish candle, because it is from there that you add the aggressive bearish sell. Okay, so the way you should tackle this should be something like this. So it should look as if you're trying to draw out a rejection block. When it is like this is the best way to actually trade it. Don't go trying to trade the main body of that bullish candle. The only time it would make sense for you to actually trade the bullish candle before you add that aggressive bearish sell is if you add something like this. How will I explain it? Let's see. You add something like this is the bullish candle. Let me see if I can change the color. Then your bearish candle starts it probably somewhere here, like this. So that's your bearish candle. Then maybe you just have a small wick somewhere here, like this. Okay, so if you have a situation like this, then you can go ahead and say, okay, this is your order block. Okay, but when you have it in a fashion like this, whereby the wick of even the bearish candle is above your order block or equal to it, like this, it's best you start from exactly where the body of the bearish candle started. That's where the main orders were pumped into the market. So that's where you should be looking to enter. Okay, to avoid unnecessary drawdown before price moves in your direction. Okay, so let's see what happened. You can see the way it moved. So price came and then got to that level, which is somewhere here, okay, before pushing down. So if you had taken your entry here, from here, like this, you would notice that you would be in serious drawdown, okay, when price returned here, because price even printed a fresh candle within the order block area. Okay, so it's going to be fair if you actually engage the market from this level. Let this level be your first level. All right, you can see it tapped into it and then pushed down. Okay, so there's another example. Someone else would come and say this bullish candle before the bearish sell is your order block. Okay, theoretically that's correct, But in a case where, like I said, you have even the wick of the bearish candle going beyond the bullish candle, then you have to be careful, especially when you're on an higher time frame. If it's a lower time frame, you can still overlook it, because if it's lower time frame, the space will not be much in terms of pips. So what I'm trying to avoid is too much drawdown, okay, and also your stop loss getting hit, then price moving in your direction. So when it's on lower time frame, the number of pips will be small, so you can actually have a bigger room for some kind of dancing around before price moves in your direction. Okay, so your stop loss will not be too big. Okay, but on an higher time frame like this, if you take your entry at the tip of the bullish candle and then you place your stop loss somewhere here, what do you think will happen? You have serious drawdown before price moves in your direction, and if care is not taken, it might even do what? It might even hit your stop loss. Okay, so basically, look at this also. The same thing is happening here. You can see the bearish candle. Sorry. Look at this bearish candle. Look at this bearish candle before the bullish aggressive buy. If you place your boundaries on this bearish candle, you would notice that the so-called bullish move has wicks below the bearish candle. So be wary anytime you see something like this. All right, it is better for you to put your entry at exactly the point where the bullishness started. Okay, where the body of the bullish candle started. So somewhere here is okay. Then based on your risk management, you can know where to position your stop loss. Okay, so price tapped into it right here and then pushed. Whereas if this were to be, if you use the body of the bearish candle, let's see what would have happened. See, you would have entered some kind of funny drawdown, which if your SL is not properly positioned, you might get tapped out painfully. Price is still going to move in your direction, so you need to be very careful. So let me just give you this extra tip. I don't want this video to be too long. Let me give you this extra tip. Something else you can do is, after you've drawn your boundary, let's say you placed your entry at the beginning of the bullishness, wherever it is you want to place your stop loss based on your risk management. What else you can, an extra layer of wisdom you can apply, when it comes to this is, let me place a vertical line somewhere here, so I will know exactly where I'm going to when I move to the lower time frame. So this H1 time frame, what you can do is you can move over to your M5 time frame. Okay, move over to a lower time frame to see things clearly and not to enter blindly. So instead of entering on the 1 hour time frame, you come down to a lower time frame and wait for a change of character on the lower time frame. Then you can do what? Then you can execute your trade from that change of character. Okay, this is the vertical line I placed, and this is our entry setup. So we simply wait for price to come back to that level. Now see, price has returned to that level. So instead of entering instantly, we don't know how far down price is going to go. So instead of entering instantly, we want to see a change of character, some kind of confirmation before we enter a buy trade. So look at this. What do you see happening here? Let me copy this horizontal line. At this point, price broke and closed above this level, okay, which is a change of character, leaving behind a demand zone. Okay, so you can just mark out the demand zone and enter on the demand zone, because this 5 minutes time frame is going to be smaller. Okay, that's the demand zone right there, which is this top looking like a small doji candle. Look, you can see it. Okay, so price did what? Price returned to the demand zone and pushed up. Then you can target opposing liquidity. Okay, you can target opposing liquidity, and you can see the way price pushed up, taking out all the opposing liquidity up here. Okay, so that will help you have a smaller stop loss. All right, I hope you've gotten one thing or two from this particular video. If you're a new viewer, subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.